My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, and put this craziness into some sort of context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. How do we get a nation of younger investors back on track? After a terrific day where the Dow surged 425 points to a new record, S&P jumped 1.14%, and NASDAQ gained 0.99%, I see the meme stocks flying again, and I wish I could convince these people there is a better way to manage your money. Not play with your money, but manage with the money. Now, I've been glued to the endless GameStop fiasco, including last week's congressional hearings, and it's starting to feel like hundreds of thousands of young people, maybe millions, have gotten hooked on the idea of beating the big, bad hedge funds at their own game. Now, there's nothing wrong with that in theory, unless you get so fixated on sticking it to the man that you forget how to make money. And people, that is the point. So I can wax on about the crazy action in the last 2 hours of today's session, an afternoon that saw a veritable blitz of what looked like coordinated buying of GameStop, AMC, Bed Bath. This succeeded beyond the wildest dreams of those behind it. Or I can say, you know what? It's time to get back to basics. At the end of the day, this is not a team sport, even as the goosing of these merry handful of stocks seems like a very well-orchestrated team effort, didn't it? So instead of chasing these risky meme plays, instead of getting impaled on a squeeze gone wrong, why not try long-term investing? Right, there's something many of these newer brokerage houses allow, and it's called trading in fractional shares, and I don't talk about it enough, and that's bad on my part, because these are wondrous things, especially for those of you who got started in your dorms or on your couches or during some Zoom calls when your name still pops up before the reveal. Fractional shares let you buy quality even when you're dealing with high dollar amount stocks. They're a godsend, and you should take advantage of them. So in the interest of getting people to do the right thing and not just buy GameStop at 147, I want to present a list of stocks in what I call the 500 Club, the $500 Club, the ones with $500 price tags or above that would be beyond your reach if it were not for the miracle of fractional trading. I'm going to give you a dozen of them, some of which are still off their highs even after today. I say I want you to pick 3 and start buying. So, I mean, look, you could do Bed Bath and you could do BlackBerry and you could do AMC. Or you can do these, okay? I mean, I'm presuming you already have GameStop. It's kind of like everybody gets that when you put the board game down. First and foremost, Amazon. Yes, a fractional share in Amazon, $3,159. This is not a reopening stock or a lockdown stock, despite what you may hear. With the positive news about J&J's vaccine today, we're about to kiss the vaccine shortage goodbye. That's why money managers dumped Amazon. They think it's a COVID stock, and they want no part of it when we reopen. They are making a mistake. Amazon's a winner because the pandemic has permanently changed our behavior. I bet they're going to have a fabulous year, and their costs are going to go down because they spend so much money on COVID. Second is Chipotle at $1,449. These guys cracked the code. They figured out how to make as much money from delivery and takeout as they would have made before the pandemic. Now, the inside of the stores are about to come back to life, and they're building out Chipotlanes. They're fancy drive-thrus all over the place because malls want to bring in traffic, and this cauliflower, you got to have it, okay? Trust me on that, if nothing else. Third, there's the trade desk at $781. This is an advertising technology play that helps companies reach cord cutters who are very hard to get to. Now, this company claims that 50% of Americans have already cut the cord. Advertisers can't reach these people efficiently without the trade desk. What a quarter. Remember what Sean Conley said last night, right? At ConAgra, 80% of his ad budget is going online. That's what you need to be thinking about. Number 4, of course, is Tesla. I get them so confused. Tesla, 742. This stock is so many things to so many people. But most importantly, you're hitching your star not just to Cathie Wood, who is the acknowledged guru of this moment, but to Elon Musk. Right now, I'm betting this guy's working on something we don't even know about that will drive the stock higher still. I will be the last one to hear about it because he doesn't like me. That's okay. I'm chill. Fifth is Intuitive Surgical at 758. This company makes precision surgery machines. I became a believer a long time ago when I ran a fundraiser for a local hospital and saw a demonstration of this wondrous device. Machines 1, people nothing, with much more to come. 6, Align Technology at $573. This is the company that's the maker of Invisalign. It's a chronically undervalued company, even by its own users. Now, if Estee Lauder were in the $500 club, I would pick it over Align. Still, this one's got a lot going for it. We forget that Facebook, Instagram, and Snap make everyone a potential star. And like it or not, your teeth are always on display. One look at our network Zoom coverage is reason enough to straighten your teeth. There are many competitors, but none of them has Align's cachet. Remember, dentists need their product because they need to make money. They can't make enough money just being dentists. They got to be like Invisalign. 7 is one that just reported after the bell, NVIDIA. Okay, it was trading at 590s. It usually goes down during the conference call because there's people who don't really understand what they're doing, but I accept that, and the First Amendment says you're allowed to be stupid as all you want. Thank you, Jefferson and Madison, for thinking of us. When you want the best chips for the data center or for gaming, that's NVIDIA. The semiconductor industry used to obey a thing called Moore's Law. That was coined by one of the co-founders of Intel. That's been supplanted by Jensen Huang's law, named after, and I call it that, but named after Jensen Huang, who may be the smartest CEO on the planet, and he is the Da Vinci of modern-day execs. He is trying to acquire ARM Holdings, which would give him a huge foothold in cell phones and central processors. The stock would double if he gets ARM Holdings. I'm quite confident of that. But I also know that there are a lot of people who don't want him to get it because they fear that NVIDIA would be too powerful. I think NVIDIA and ARM would be fabulous. But even without it, the stock can go higher. Number 8, speaking of semiconductors, we do have a chip shortage right now. That means more demand for semiconductor capital equipment from the best of the best, Lam Research. I like it right here, just under 597. But I'd like it even more on one of the periodic pullbacks. Memo to NXP Semi. Come on the show and explain to us why you are not giving enough of your chips to American automakers. I am a forgiving person if you have a good excuse. 9, businesses need smooth workflows. And to make that happen, they bring in ServiceNow, one of the favorite cloud stocks, currently at 551. These guys have been through a series of quality CEOs, but now the company's run by the man with the greatest Rolodex on earth, Bill McDermott, formerly of SAP. He's taken ServiceNow to a level I never dreamed it could get to. Hitch up. 10 is Netflix. Hey, listen, I don't like to overthink things, people. This is a $553 stock with a $245 billion market cap. How did they get there? By matching your brain with the content that you want to see. Netflix is another company that was accelerating even before the pandemic. Now it's become so ingrained that it's the primary way millions of people watch TV. Number 11, now here's one you may not know, and it's called Hubspot. This is a $518 stock that's growing like a weed. HubSpot's cloud-based marketing software can target you and get you things that you didn't even know you wanted. Go to the site and see what they did for the Rock and Roll Hall of Fame, which I was supposed to go to last year, but because of the pandemic, no. I do prefer Twilio to this, but remember, I have to be true to the $500 club, and Twilio is not yet at $500. Finally, there is Alphabet, the parent of Google, with a $2,084 stock. This company has so many underrated gems: healthcare, mobility, entertainment. They're barely begun to monetize most of their businesses. Meanwhile, they've also become the number 3 player in the Mexican standoff that is cloud infrastructure business. They're right behind Amazon Web Services and Microsoft Azure. Okay, maybe a little further than that. When you see Thomas Kurian, he's the guy who runs Google Cloud, in action, you realize it's a contender. Plus, Alphabet has the added advantage of being a reopening play because a lot of their advertising had to do with travel. Listen, I'm not telling you to give up on the crusade to push up GameStop or AMC or Palantir or BlackBerry or whatever else has caught the fancy of the Wall Street Bets crowd. Although, if you bought GameStop at $40, say, yesterday, and you can sell the triple digits, I don't know. That seems smart to me. I know it seems dumb to a lot of you. It's just that I took that arithmetic class with Mrs. Mixer in 5th grade, and I remember that 150 is higher than 40, but I could be wrong. Anyway, I do think that these stocks were elevated very well by whoever wanted them to be orchestrated. Everyone who wanted them higher, and I wish you all the best of luck. But the bottom line, if you really want to beat the big institutions at their own game, you don't do it with GameStop and AMC. You do it with these companies, okay? You do it with fractional shares, and you do it right. The $500 club, even as nothing's more fun than watching GameStop doing whatever it's doing, this, people, is how you make real wealth.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC. on YouTube.